So let's kind of first start off with traditional insurance versus micro insurance. What is the difference and what is like the state of the market, just so we understand, what this is about. So, maybe William, if you can just kind of provide like your insights around this.
Sure, yeah. I suppose different people might define it differently, so I won't try to pretend there's one and only one definition. But I think probably what you're referencing is that traditional insurance has sometimes had difficulty reaching, let's say, people in the economy who aren't as well connected to, traditional institutions, right? If they're unbanked or if they're in the middle of a very rural area, if they don't have infrastructure nearby that they can take advantage of, historically they've basically been out of the reach, I think, of the insurance industry in a lot of ways. Or even if they were possibly in the reach, maybe it was inaffordable for insurance companies to offer them products because of the cost of doing business in some of those markets. So in that regard, I guess we're considering microinsurance to be utilization of blockchain technology, utilization of all the greatest innovations that have come out of the last 5 to 10 years, such that it's now far less expensive to offer such insurance to communities around the world, and therefore these folks who previously didn't have access can buy smaller policies that are more in line with what they can afford and cover them for their daily activities. I'm guessing that's probably the right way to define it for the panel at hand.
It sounds about right.
Right. Yeah, Gregor, what's your take on it and your views?
Yeah, I'm pretty much, the term micro in a way also kind of defines it that we are looking at much smaller policies in most cases, and they're usually also covering a very specific product, a much smaller range of cases. And obviously, and I think this is the most important thing, it's like at very low premiums. So a lot of the micro insurances are not the insurances that you use for an annual coverage. They are more on demand. You would purchase a micro insurance product for a specific, event, or to get protection for something that is very valuable but very specific. But I think one of the main components as well, and this is why this is like so exciting in this day and age, I guess, is the insurance world in general is kind of at a peaking out because there is only this much of a market in developed markets with the products that you have today. But if you want to keep growing, specifically in the insurance industry, you need to look at the new markets. And the new markets are the emerging markets. But now the consumers in those emerging markets are very different people. And like as what we have heard from William earlier, like a lot of these people are from the middle and lower income brackets. So you need to create products that come at a lower price points. And then, of course, you also need to find the right distribution channel to them. I think one of the differences as well from traditional or I would say, traditional insurance versus micro insurance is the way you distribute it, because it's just not cost effective to distribute micro insurance through your brokers, through your agents in every single city, and everyone is taking a big piece out of that pie. So that cost structure does not work for micro insurance. And that's why I guess we are in a very excited space now. I think in a very new market. We haven't even seen the beginning of this.
Yeah, I agree. I think people don't even imagine they can just cover micro events, right, for very short periods of time. It's just something we're not accustomed, right? Especially because buying insurance is something, it's not easy, right? There's a lot of paperwork, there's a lot of things, but this is going to change everything, right?